Welcome back. Well, let's focus on some fundamental analysis. And to help us out, we have Prakash Diwan. Prakash, we're just talking about this. The SEBI criteria has been changed for F&O inclusion, exclusion. And because of that, I'm looking at two stocks, Zomato as well as Jio Financial. Now, in the near term, you could read it positively that these stocks will come the F&O. The flip side is now you can short them as well. How do you approach both these two names? I particularly ask you because both of them have seen, I think Zomato's 10% down from the recent peak after running up big time, and Jio Financial as well, I think it's 15% down from the recent peak.
Good morning, Nigel. You're absolutely right. This criteria was badly required. This overhaul does a lot of things, and I'll come specifically to Zomato and Jio to answer your question. But I just want to leave you with this thought that the number of times a lot of these stocks keep going in and out of bands and all, that will change because the market-wide position norms are getting changed. The volume criteria is making sure that thinly traded shares do not get subjected to these vagaries. So in a way, it's nice. And remember, the exclusion list, potential exclusion list is smaller than the inclusion list, which is good news in that sense for people who like to trade. Specifically on Zomato and Jio, what it does is, I don't think Jio has gone into that orbit of being very actively traded or being subject to volatility in price movements. But Zomato has enough price volume action to justify differing views. Any stock that has a differing view in the market on valuations is definitely worth looking at from a shorting potential perspective. I'm not saying that it's worth shorting at this point in time, but if there is, let's say, some disappointment in fundamentals, at least you can hedge your position through this mechanism and make sure that while you are long in a positional way, in a longer term view, in the short term, at least the volatility doesn't kind of take you down. So that's where the advantage of this thing is. And as institutional interest grows, Nigel, I think that these names will also kind of start seeing that kind of a need to be in the future segment. And remember, that's the stepping stone to be in the Nifty. So, at some point, if any stock aspires to be in the Nifty, this is the route that they will have to go through.
Prakash, hi, good morning. I wonder if you got a chance to look at this big merger of the Gujarat oil and gas entities, right? There's so much happening now. You have Gujarat State Petronet, Gujarat State Petroleum, all of them merging into Gujarat Gas, and then we'll have a demerger of the combined transmission businesses, and ultimately we'll have two individual listed entities. What do you make of it? And from a shareholder perspective, we've already seen the huge run-up in Gujarat State Petronet. Would you recommend any buys right now on Gujarat Gas as this gets underway?
Good morning, Surbhi. So it's a fairly complex structure in terms of the merger. It's a three-step process very clearly, and you'll have to assign different likelihoods of probabilities to what outcomes you'll see in terms of prices for each of these steps. Now, let me step back a bit and tell you that the reason why this precipitated is that the structure is anyways, the holding structure is fairly complex. If you actually look at GSPC and GSPL and the holding in Gujarat Gas, the cross holdings make it very complex to assign a fair value to any of the businesses, especially if you have to do some sort of an impact analysis on any kind of a development. This will make sure that you have a pure play business on gas exploration production, and you'll have a transmission business which is separate. My sense is the GTL piece, which you will get eventually and which will get demerged and listed, is actually the cherry on the cake. I find transmission to be far more, resilient in terms of movements. And if you look at GAIL, for example, after GAIL, we've had no other business that's purely into this kind of a space. And that will be a very welcome change to have in the portfolio. So if you had to buy Gujarat Gas, to eventually get into the GTL stock.
Okay, got that. I just want to highlight one more name. If you can pull up Paytm, the stock price on Friday went up like a rocket. Move started at about 130-ish or so, and I think finally ended about 12-13% higher. Now, I think Nimesh has also highlighted that there is a large block which is going to happen sometime this week. Right now, there are two foreign bankers who are sort of working on this, and we don't know if the sort of block is going to be launched today or sometime during the course of the week, but this is going to be a big one. Well, the stock was reacting certainly to something. There has been a little bit of easing on the regulatory aspect, small sort of wins for Paytm along the way, but the big one with regards to, of course, the restrictions imposed by the RBI still are there. Prakash, I don't know if you have any thoughts here on Paytm. 621 as of close on Friday.
No, I do agree. The regulatory forbearance is kind of making sure that Paytm comes back into some sort of a potential path to profitability, given the fact that they're allowed to do a business that's never been so bad. It's all the other businesses that were dragging things down. But there is always going to be this overhang of what happens if Paytm gets acquired by some other business, some other company. Now, if you're relying on that event to unfold in terms of value unlocking, then it's a very uncertain kind of a bet. So I somehow feel you could make money, but there's no visibility in terms of how much will things change and what is the price that you'll finally be able to get out. You would rather rely on businesses which have something which is much more benign and sane in terms of what's happening on the profitability side. So I do understand it's done very well. The time to buy was when things started looking up, and that was about $200 or $150 lower. At this point, I think the risk reward, to my understanding, is a bit complex to really fathom. So I wouldn't want to put money out into something which I don't understand.
Absolutely. At $350, I think it was, as you said, simple, right? I mean, they had cash of about 9,000-10,000 crores, and there was, of course, the business itself, which was available at a pretty sort of low overall market cap basis. Not anymore now, though. Well, we'll sort of get back to more stocks with Prakash in a bit, but the